Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. After an amazing week for the Bears, can we finally get a relief rally or relief bounce, if you will? Not that I want one, but that's the question. After multiple down days in a row, Friday, SPY managed to close a few cents higher than Thursday's high, but relatively the same. And I'm looking at this pattern, doing a little research. I'm like, what does this look like? So I Google it, and according to srating.com, this is what's called a counter attack line. Okay? And here it is. Here's an example. And pretty much in a bullish counterattack, the first candle is red at the bottom of a trend. The second candle opens after a gap down but closes at the closing price of the prior candle. In other words, the closing price of the first and the second candle is the same, while the first candle was red and the second is a green one. So we look at the daily. Thursday's candle was a close at 436.29, while Friday's close was 436.5. Not the same. So a few cents off. So I guess this does not count as a counterattack line, a bullish counterattack line. But the question still remains, can we get a relief bounce? And as you guys know, I go by the levels. Where do I get my levels from? I get them from fib levels, buy and supply zones, trend lines from patterns, right? And as of right now, the trend line that I like to talk to you guys about is my white trend line. This has been shared on the Discord and Substack for multiple days, but this is the first time I'm sharing this trend line on the YouTube. And it would definitely be cool if you guys add this trend line to your chart as well, so we'll be on the same page for this coming week. Okay, I have the trend line starting from February 2nd high, connecting to June 5th high, and it also happened to connect to June 27th low. Okay, we closed around that level, that trend line, on Thursday, and then we close on that trend line again on Friday. So the market, in my opinion, is recognizing and acknowledging this trend line. We've had multiple touches. Okay, we combine it with our fib level at 437, and we could have ourselves a potential bull case if the price can recapture it. So what does that mean? That means a recapture of 437, I would look to long. All right, still overall bearish below 442 and 444. So if you do take this trade, in my opinion, I would size down until we have more reasons to be bullish. You can always add to your winners. People like to add to their losers. You can always add to your winners. All right, but you don't have to go all in on the first opportunity. Scale in, the power of scaling in. But yeah, I would scale in, level to level style, of course, or sizing down, whatever you choose to do. But above 437, that's a sign that we could get ourselves a relief bounce. Now, for the people who love RSI, the RSI could back that up because it's in oversold territory. It's not a buying opportunity, remember. But combine that RSI with a recapture of 437 and, of course, 438.5, my next resistant level, could be a good R&R for some longs, a quick trade, that is, level to level style up to 440, 442, and potentially a back test of 444. Okay, but that's the bull case for a potential relief bounce, and it has to recapture. Have to start with the recapture of 437. Otherwise, as long as below 437 equilibrium level, I would stay bearish And, we want to watch for the next breakdown of support, which is around 435.5. And that will put 434, 432.5, and 431-ish back in play. 431 was a pivot low back in late June, okay? Those targets would be in play. And below 431, I got 429.6. If I zoom out, I have fib levels from all-time high down to October 2022 low. If 429.6 is lost, that is my 61.8 fib level. That's the golden level of Fibonacci trading. And if that level is lost, guys, in my opinion, the potential for the bull market returning, or at the very least going back to all-time high below 429.6, that's canceled. Okay? There's no bull market where price action, or the price, to be more specific, is below the 61.8 fib level. There's no bull market that is below that fib level. Okay? So it's very critical that the bulls can defend that. All right? Very critical. But as of right now, in the shorter term, because 429.6 is more of a macro level, but in the shorter term, 437 above bullish for a relief bounce, I'd be a lot more bullish in favor of a new 52-week high, or at the very least retest 52-week high above 444. Okay? But as long as below 437, let's stay bearish. Equilibrium level, 437. Triple Q, it could not close. I mean, we got to some beautiful low down to 354.7, but no official close below 357.5. Okay, recaptured it. It gapped down and recaptured it. All right. So that's obviously support. If bears want more downside and continue this sell-off, it's going to have to get below 357.5. And we can get down to 354.7, this pivot low here. And then maybe down lower to 353. That's a pivot low from early June. And then down to 351 and 349. There's some more fib levels I got there on higher or bigger trend lines. But overall, that's the bear case. Got to be below 357.5. As of right now, if bulls want a relief rally or relief bounce, 359.5 and 361 are the levels they need to clear. If those levels clear, we can get some retracement back to the upside, some back tests to put 363.4, 365, and possibly 367 back in play. All right. Dow Jones broke down my trend line, my orange trend line. I mentioned you guys, be bearish if it does. Worked out beautiful. Got very close to my 352.5 level. Only got to got close to my 342.5 level. Was only able to get to 342.6. Close. But as of right now, this right here, the close of this candle is 345. The close of this candle is around 345. So back to that pattern I was talking about, the counter attack line. It's more legit. It looks more legit with the Dow Jones. Okay? So follow through. If this is a bullish thing that we're gonna go back up, reversal or relief rally, whatever it is, for follow through, 346.5 must recapture. It must clear to put 349, 350, 351.7, 353, 354.5, and 355.7 all back in play. Okay? You want to see it above 345 and clear 346.5. If that does, look to long. As long as if it get back below 345, bears need the breakdown of 342.5 to trigger more downside. And it is possible that can happen. Don't argue with the price action. We have a gap at 339.6s. Fib level around 337.8 as well. Okay? IWM. This looking like the opposite, almost the opposite of a dark cloud candle. Dark cloud candle usually bearish reversals. I forgot what the name is when it's the bullish version of it. But either way, got this green trend line. To recapture it is at 185.2. I have a fib level at 185.7. So overall, want to be safe, round it to a whole number. It needs above 186. IWM needs above 186. I will long above that with 187.2 and 189 and play to back test this yellow trend line that I have here. Above 189, that's a that's a breakout. It's bullish and could put higher levels back in play with 191.4, 192.7, 194, 195, 196.4, those levels, okay? Otherwise, if it's below 184.5 and it breaks down 183.5, I would definitely be bearish with 182 and 180 in play, possibly even lower. Tesla had a nice gap down, overall chop candle, good volatility, tradable intraday moves, but on a daily chart, technically looking like a chop candle here. And it's between my fib levels, 218.3 down to 211.4. Didn't quite hit those levels intraday, but based on the daily chart, those are the fib levels to watch. Okay, so that's the range. I got 215 and 213 as levels between that range that you guys can use as pivot levels if you want to trade that range. But overall, bulls, to get a decent size relief bounce, they need above 218.3 to put high levels in play, possibly up to 223, 227, and maybe back up to 230 and 233-ish. But if it breaks down 213 and 211.4, we could go a lot lower, down to 208, and maybe test my blue trend line at 203.5. Now, if I zoom out, show you my blue trend line, it started back early this year in January. Okay, this is the 2023 uptrend line. We could get that third touch. If Tesla keeps dropping, we could get that third touch. It'll be around 203.5. And I would expect the bounce there. No guarantee, but I would expect some type of buying pressure there. But to test that, bears need below 213 and 211.4. All right? And it doesn't have to test, but bulls will definitely need above 218.3 to put the high targets in play. Apple finally broke down that high we had back in August of 2022. It was a decent tradable move if you shorted the breakdown of 176. Apple dropped down to 172-ish, another support level that I had, and bounced. But, $4 move, decent. But from here, 172 is the level that needs to fail for more downside. Down to 170, 168, and 166.7. We do have a gap around 165.7 as well, okay? That's if 172 failed. Those levels could potentially be in play. As of right now, if you're looking for a bounce, watch out for that. Watch that 176 level. August 2022 high. Gotta recapture. Give us that false breakdown setup, and we could possibly get some type of bounce back to the higher levels. But above 176, false breakdown setup to put 178, 180, 182-ish in play. And then the start of the gap is at 185.5, and it fills all the way up to 191-ish. All right. NVDA had a beautiful trade ideas, exclusive content for tier 2 and tier 3 members. But overall, looking at this here, we want to look at it unbiasedly. Notice my green trend line. Recently had a false breakdown setup of this green trend line. And Friday, we almost back tested it as a support. Now, let me go on a 4-hour chart. You can see my green trend line will look better. I think that's where I made it, actually. Yeah. So I started right here from the mid-June highs connect to the early July high. This is a 4-hour chart, and there's the false breakdown setup. Almost back tested it. All right. So, I mean, if bulls want to show follow through, the level to watch as support critical is 431.5. If bulls can defend that level, possible that this back test was a higher low, and follow through would be obviously the clear more resistant level, starting with 436, 438, and then 440. Now above 440, I would definitely be a little more bearish. I would definitely be a little more bullish and favor more upside. Ultimate target will be around 452-ish, but above 452-ish, it's possible we can go up, back up to 457.5 in the 460 range. Okay, now the sentiment would cancel if we break down 431.5. If that does look to short, with 428 and 425 back in play, very bearish if below 425, with 420.5 maybe back down to 416-ish in play. Okay, Microsoft, we hit a fib level, bounced off a fib level, my 1.382 fib level. So if bulls want to show follow through from that bounce, it needs to recapture 317.6. If it does look too long, we could possibly go back and back test some levels. What did I have? 320, of course, 322, and maybe, just maybe, 325. Okay, as of right now, to be bearish, I need to see below 313 and 311.8. Those support fails, sell off continues. Don't argue with the price action. But the RSI is oversold. Well, the RSI is a lagging indicator, my friend. Amazon, even the RSI follows the price action. So if you like the RSI, do what it does and follow the price action. Amazon, very good trade since we had that false breakout of 139. Managed to drop as low as 131-ish. Didn't quite fill the gap at 130. There was also a gap at 128.8-ish. There's so many gaps on on Amazon. We filled a good amount of the ones we had here. We just have some more. And if bears want to fill it some more, they need to break down 131.5. An actual close below. We didn't get a close below. But if we do get a close below 130, 128.5, and 127-ish would be all in play, and we'll fill some gaps. But if they don't care about the gaps usually get filled, yes, but they don't have to get filled right away. And if they want to postpone it longer, if bulls want to postpone it longer, they need to recapture 134.5 and 136.6. There is actually a gap to the top around 137.7-ish. And of course, I got resistance at 139. Above 139 could possibly go up even higher. New 52-week high, maybe up to 145. But it got to get above 139 though. But to start off, 134.5 and 136.6 to start off for the bulls. Otherwise, we could fill those gaps to the downside. Google finally got that close below 129.5. As long as below 129.5, I would stay bearish. Drop down to 126.5 and maybe down to 125.6 could be possible to test us, to fill out this flag more. Maybe we'll get some buying pressure. But if not, and we break down 125.5, I could definitely see Google filling the gap around 122.5-ish, okay? Otherwise, if it can recapture 129.5, false breakdown setup with 131.5, 132.8, and 134.8-ish in play. Meta, a good follow through since breaking down the 2023 trend line. We closed below a fib level on Thursday. We zoom in. There we go. It was at 285.7. We broke that down on Thursday. And then on Friday, back tested that level as a resistance. Found a little selling pressure, but not much follow through though. Just a little defense, but not much offense. So 285.7. Bulls can recapture that. Based on this context, if bulls can recapture that, could be a good buying opportunity. And put 290, 292 and back test of the trend line around 301-ish, 302-ish in play, okay? Otherwise, if it stays below 285.7, I wouldn't get bullish. Overall, that would be bearish with next support at 281. 281 fails. We could drop down to 279. Maybe download back down to 274.3-ish with 272 below that. Netflix, beautiful breakdown. I mentioned to get bearish below 415.3. That broke down. Bounced a little bit around the 41.6 support level that I had there and closed below on Friday. Now, if bears want more downside, they're going to have to break down 41.6 to get more downside. I would target 396.3-ish first. And if that fails, we could drop a whole lot more. We do have a gap all the way down to 379-ish. It might take some time to get filled, but you see how the volatility on Netflix is. Don't put nothing past Netflix. Overall, 41.6 is the level that bears need for more downside. As of right now, there is resistance at 406.5. If bulls want a relief rally, got to clear some resistance down with 406.5, 410, 412, and then 415.3 is above those. We can maybe get more of a bounce to the upside. All right, watch the levels. AMD false breakdown setup. Well, interesting, right? That 107 level. This is 6-hour chart, throwing me off. Let me go back to the daily. Okay, beautiful. So yeah, I mentioned, we want to get bearish, look to short. If we break down 107, we got the breakdown Thursday. I hope you guys played it. And, we gapped down on Friday, going as low as 101.6s before a little relief bounce. Okay. So from here, if bulls want to be bullish, they got to recapture 107. Okay. A recapture 107 would be a decent false breakdown setup based on the daily chart, which is more powerful than the smaller time frame. And then it'll put our levels back in play, okay? 109.5, 111, 113, 115, 117. You guys should have these levels already, right? I'm just explaining the context that, to help us trade it. But overall, the levels are the same. Well, from here, that's the bull case. Bear case, as long as below 107. Overall, bearish. Watch the breakdown of more support, right? 105, 103.5. And watch that breakdown of 101.6 to get more lower levels. 100. And I would also target fib level around 96.4-ish. Okay. Now here is the VIX. Meh. Was able to get a high of 18.88. Couldn't quite stay above 17. I miss when the VIX was above 20 because the market was a lot more interesting when the VIX was above 20. Overall, though, levels are still the same. If it breaks down 17, 15.5 is back in play. Below 15.5, obviously very bearish. I like to see it defend 17, though, and then try to go up higher and give 20 a shot. And maybe, just maybe, recapture that level. Do I have a trend line here? Yes, I do. And look at that. 1, 2, 3. No coincidence where the VIX decided to reject from. So obviously a break of this green trend line would be very bullish. A bullish VIX is usually a bearish SPY. We'll see what happens. But overall right now we reject it. Follow through would be to break down 17 and 15.5. If that's the case, SPY could be bullish. I don't know. We'll see. Check that seasonality for August. 20-year season. Oh, dark pool order. $4 billion in premium at the 436.36 level. What? I mean, if we look at the price action for Friday, it was meh at best. But then you look at the dark pool, $4 billion. You would think that much premium, we would get a little more volatility. We also had $1.5 billion in premium at 436.30. So we see, oh, look at this, 820 million. So not in the billions, but 820 million. That's close, around 436.29. So we see here that the big institutions have an area of interest around 436.3. So what does that tell me? It tells me that a move may be coming on Monday. Hopefully, so with this liquidity that's provided, hopefully we don't get a choppy Monday. But maybe, just maybe, they use it for a gap up or a gap down. But you know where the pivot level is? For 36.3-ish. So, above it, bullish, below it, bearish. All right. Option flow, filter 500K premiums or above. I just want to see the big money. Bearish for the SPY. Bearish for QQQ. Bearish for IWM. Nothing for Dow Jones. Bearish for Tesla. Kind of bullish for Apple. Bullish for NVDA. Microsoft is bullish. That's interesting. Amazon is bullish. Google is nothing. Google with the L is nothing. Meta, bearish. Netflix, nothing for Netflix. AMD, bearish. And then here is the VIX. It is 50-50. It's split. All right. Thank you guys so much for watching. I hope you guys found value in this video. Good luck on the coming week. Peace.